All right, everyone, week 2, we are talking about your business structure and organization. We're going to focus on organizational structure and management, as well as your legal and your tax structure. All right, let's first look at your organizational structure and management. This area focuses not only on the people of the organization, but also on the responsibilities and the tasks that need to be completed. Often, in the early stages, it may not seem that important to think about organizational structure. You're handling most of the tasks yourself, or you have minimal staff, and everyone just does a little bit of everything. However, understanding how your business should run and who should be responsible for various tasks and outcomes is important to outline early on. So as you're building your organizational structure, you want to consider not only what you need now, but what is going to make sense for your business as you scale. So first you want to think about the functional areas that your business needs. So a functional area is essentially a division or a department. It's really a grouping of tasks or responsibilities that needs to be completed in the business. So for most businesses, this is going to include operations and production. That's the department that is building the product or delivering the service. So really that's, the heart of the business and what you're actually selling. Then you've got your marketing and sales group, and that is going to be the group that is going to be driving new customers, new revenue to your business. Then you've got your administration group. So you've got the group that is handling all of the things that happen in business that are not directly related to selling or making of your product. So your accounting, your HR, your IT, just all the things on the back end that need to be handled for the company. Each business is different. So you might have companies that have their marketing and sales divisions are split into separate areas. You might have larger companies are going to split, accounting, HR, IT, they're going to all be separate departments. Whereas a smaller company is going to keep them all as one. There isn't a right or wrong answer in this. It's just whatever makes the most sense for the company, and really just as a leader, what's going to be manageable for you and make the most sense for you. So once you've determined the functional areas, then you're really on your way to creating your leadership team. So each of your functional areas or your departments is going to have a leader of that area. And that leader is going to be responsible for the outcomes and the performance of that division or that department, but they also are going to serve on the leadership team. So as a member of the leadership team, it helps if we bring everybody that's leading these individual departments onto one team to help lead the company, then it keeps everybody moving towards the same goal. So the responsibility of each leader is going to be the outcomes and performance of their own individual department, but then also for making decisions for the business as a whole and how they move forward, and really set the direction of the company. So once you've got your functional areas, you've got your leadership team set, then it's time to go and build out the full accountability chart. And that chart is going to be the structure of all the people in the organization and each department and each position, and outlines and defines the roles and responsibilities of each. The accountability chart is the tool that you're going to use to outline each role and responsibility within the company. You are going to have a box for each position within the company, and it is going to list out the responsibilities for each one of those roles, what their outcomes and their tasks and responsibilities are for each. As you're developing your accountability chart, you want to make sure you're thinking of the ideal structure for your company. What makes the most sense? What are the tasks that need to be combined together to be most efficient? You want to think about not what you have today, not what you can afford today, but what would be those positions that you would want to fill if you could have each position filled in the most ideal way for the company. So when you're thinking through that, today you might be wearing 10 different hats and you are the CEO, you're the director of marketing, you are the only salesperson, you also deliver the product, you're in every one of those boxes, but you want to think about if you could separate out your tasks into groupings of tasks that make the most sense to go together, what would those positions look like? Each of the departments or your divisions, those functional areas that you've developed, they're going to have their own section on your accountability chart. There will be a leader of each one of those departments, and then you're going to have all the positions that report to that leader and or other levels that may report up within that department. Each of your boxes on your organizational chart, your accountability chart, each box should have the position listed, and then you should have each of the responsibilities or the tasks that are part of that position within that box. There's some things to think about when you're developing your accountability chart. So the first one is you cannot have the same responsibility in more than one box. So, for example, if you have your staff accountant and you say that one of their key results areas, one of their responsibilities is that they need to keep AR collections under 60 days. They need an average AR to be under 60 days. And then you also have an accounts receivable clerk, and they also have that responsibility under their position. They need to keep AR under 60 days. Then when it comes time to review AR and you see that AR is averaging 90 days, who do you go to hold them accountable for that? And you can't, because if you have more than one person accountable for something, then no one is accountable for it. Because the staff accountant might think that, well, yes, I understand that, we're supposed to keep it under 60 days, but I thought the AR clerk was following up on AR, so she must not have been doing what she was supposed to do. The AR clerk may say, well, yes, but I thought the staff accountant, that was their job, was to follow up on AR because it was on their key results area. So you need to make sure that when you are developing this accountability chart, there is not one responsibility that is showing up in more than one box, okay? An exception to this is something like a sales manager. So a sales manager, one of their key responsibilities is going to be bringing in new revenue, right? So they may have listed in their responsibility to, bring in $1 million of new revenue every year. Well, you might have multiple sales managers and they have the exact same responsibility of bringing in $1 million of revenue a year, okay? But where this is different is that it's their own $1 million. It's their own book of business. So that may be their responsibility for their region. That may be their responsibility for their book of customers. You may have a sales manager that oversees commercial accounts and one that oversees residential accounts. So as long as there is a distinction as to how that responsibility or how that task is different, then it is okay if it looks the same in the box, but it needs to be different so that you can hold them accountable to that result that you are expecting of them. So that's one of the areas to think about when you're developing this, is you cannot have the same responsibility show up in more than one box. Now you can have the same name show up in multiple boxes. So like I was saying at the beginning, you may be wearing 10 hats right now. You may be the sales manager, the marketing manager, you're also the customer service rep. You are wearing many hats as you get started. So you can have the same name in multiple boxes. You just can't have the same responsibility in those boxes. So it's something really important to think about as you're developing this chart, is to think about the position and what makes the most sense to go together, not just what makes sense because of who you have today and who's doing various tasks. So for example, if I've got somebody who is really, they're my staff accountant. I hired them as a staff accountant, and they are doing our accounting work for us. But we are not big enough to need a full-time accounting person, and so we give them other tasks as well. And they happen to be really good at social media. So in addition to doing our invoicing and our bookkeeping and managing our bank accounts, they also manage our social media accounts. That's fine, and that's great that they're able to do those tasks. However, when I'm developing my organizational chart, and when I'm looking at the accountability that I'm going to be assigning to each of these positions, I don't want to create a position based on this unique combination of skill sets that I've got this person doing, right? Typically, social media is not going to be combined with doing the bookkeeping. That's typically not a skill set that goes together, and it's typically just not a group of tasks that go together. So just because I have a person today that can do both of those things does not mean that that's how it should look on the organizational chart. Now, that person's name may be in those two different boxes today because they're doing both tasks, but I'm going to develop my social media managing, marketing position, whatever that looks like, as a position, and then I'm going to develop my staff accountant role as a position. Two separate boxes with two separate accountabilities, but they can have the same name within those boxes because we have the same person performing those tasks. So Couple of things to remember on your organizational chart, your accountability chart, is you are designing this with each department. You are going to have every position that you think the company will need, in the ideal world, that this is what we want as a company, and then you're going to list out the tasks and responsibilities that are responsible for each of those. Now, as you do this, you are obviously, you don't have a crystal ball. You can't think about where you're going to be 10 years from now. So you want to do the best you can to think about what the best accountability chart would be for the business in 10 years. And then you'll adjust and adapt as you grow. You'll be adding new positions or changing positions. You might be splitting positions out because you determine that they need to, they're too big of a job for one person, and you'll split them apart. So come up with the best structure that you can envision today, and then just know that you're going to be adapting and changing that as you move forward. All right, so here's an example accountability chart just to give you a visual of what this looks like. You will see here on the first page, this is the leadership team that is being represented here. So we've got the leader of each of our different departments, our sales and marketing department, our operations department, and our administration department. Those are the leaders of each of those departments here, and then they report up to the president, who reports up to the CEO. You'll see here that the president and the CEO is the same name. So this is an example of having the same name in multiple boxes. You'll also see, one of the things I had mentioned is that you can't have the same responsibility showing up in multiple boxes. But a couple of exceptions to that rule I wanted to know. One is you'll see here we've got leadership team collaboration, and that's listed under each of those. And so what that is saying that while they have their own responsibilities for their department, they are also being asked to collaborate as a leadership team. So they are expected to participate on the leadership team and expected to be a part of that. And so it is unique in that it is unique for each of those positions to bring their participation to the leadership team. The other consistent responsibility you'll see with lots of different positions is lead, managing, and holding accountable. You'll see that listed 3 different times on here. Actually, the president also has that. And what that really is representing is that they need to manage their team and they need to hold their team accountable. And so again, this is the same yet unique because they are responsible for leading, managing, holding their team accountable. So anybody who reports to them, they're responsible for that. So Mark is not responsible for holding Joe's people accountable, but he's responsible for holding his own team accountable. So there are some exceptions to that rule of, you can't have the same responsibility in more than one box, but there has to be uniqueness to that responsibility for it to be listed more than once. So we'll move to the next page here that has the next level. So this is our sales and marketing team, and this is where you can see that we have our VP, which is the leader of this team, and they're also a part of that leadership team. Then we have the director of sales reports to Mark as the VP, then the director of marketing reports to Mark, and then the marketing and sales support specialist also reports to Mark. You'll see here that we have Mark is listed into 2 different boxes. So Mark is the VP, but he also happens to be responsible for sales because we have not filled that position as a separate person. Then you'll see Mandy is the director of marketing. She also happens to be the marketing and sales support specialist. So she is responsible for the tasks and the responsibilities in both of those boxes at this time. So this is an example, again, of having the same person listed as in multiple boxes and wearing multiple hats in there. We'll move now to the operations team. This looks very similar. You've got your VP of operations, and then you've got, in this case, we have an operations manager. So an operations manager is just another level in there to help to manage the trainers and the scheduler. You'll see Elise is the scheduler as well as the operations manager. So she is currently filling both of those roles. And then you've got your trainers here, which are the trainers of the programming. And so you've got each of those listed. So again, you've got multiple people here. So they each have the same responsibilities, but for their program or for their book, for their clients. So they do have the same responsibility, but there is a uniqueness to it because it is for their own book of business that they're doing that. And then we've got our administration team. So we have the VP here. You'll notice on this, we've got Melly is really wearing all the hats of the administration team because we're small, and so we're a small company, and so we are saying that at this time, this is what we can support, and Melly is going to wear all the hats. She is going to be our accounting person, she's going to be our IT person, and our HR person. But you'll also notice Mandy here. Mandy is the office manager, and she also, if you remember, was on our sales and marketing team. And so this is a good example of someone is wearing multiple hats, but they happen to split across departments. And when you have that, which is okay, it's going to happen in smaller companies, the thing I want to point out or to suggest is to make sure that if you have someone who is sitting in multiple seats and they're in different departments, make sure that they only have one boss. So they should only have one manager that that is truly managing them. They're managing their performance. If they were going to call in sick one day, they're going to call their manager. They have one person managing them. And then that manager should work with the manager who would be the manager on the other team to coordinate and make sure that everything's getting done that needs to be, performance is where it needs to be. And Mandy can take tasks from Melly, and Mandy can work really closely with Melly and do all of that, but Mandy just needs to know is Melly my manager or is Mark my manager. She needs to know who is her actual manager. It's just better for the team member. It just makes things a lot cleaner and simpler. And if there is an issue of priorities or what I should be working on, then the managers can get together and discuss, but the team member is only having to take direction from one person when it comes to that. So just something to consider as you're developing and building out your team. All right, so let's talk about our example companies. So talking about Bootcamp, and we just really went through it when we just looked through the accountability chart, but we made the decision that we're going to have 3 functional areas. So we have sales and marketing, operations, administration, and then we had 15 unique roles that we had developed in our company and what we thought we needed as positions. But as we know, we have multiple people sitting in multiple seats due to the size of the company and what the resources that we have currently. All right, so now we're going to switch gears a little bit and we're going to talk about the legal structure of the business. And this is essentially how your business is organized. And the first thing I want to note while talking about this section is that I am not an attorney and I'm not giving legal advice. But the best advice that I can give you as a business owner is to get an attorney and to make sure you consult with them before you set up your business. If you've already set up your business and you did not consult an attorney, I highly recommend that you get with an attorney to make sure that everything is established correctly and in the best way for you. Every state has different rules and every state has different types of structures that you can set up. So it's important that you consult with an attorney that is familiar with the rules within the location you are to make sure that you're set up correctly. There are various different structures that you can be set up from a legal standpoint for your business. You've got sole proprietorship, limited liability companies, partnerships, corporations. There's various others that are used less often. And we're just going to talk about a few of those today and just some of the differences of each, pros, cons, just some of the things you might want to consider. But again, at the end of the day, you want to make sure that you are consulting with your attorney and that you get set up the best for your business and how you operate. Before we get into the specifics of each structure, I wanted to address the legal structure versus the tax structure. I get the question a lot, should I set up an LLC for tax purposes? And the answer is an LLC will not necessarily change your tax classification. So you want to set up the correct legal structure for your business based on your consultation with your attorney and making sure that you are protecting yourself and that you're setting yourself up in the right way for your state and your current type of business and the best protection for you. Then you take that setup that you have and determine what tax classification you can set up and what makes the most sense for your business. So for example, if I'm a sole proprietor, I am currently reporting my taxes on my Schedule C on my personal return. That's how a sole proprietor reports taxes. If I set up an LLC as a single member LLC. So I set up an LLC for legal purposes. I've set up an entity separate from myself as an individual, but I'm still the only owner. Then if I don't make any special elections for tax purposes, I am going to still be filing my taxes on my Schedule C on my personal return. So just because I set up an LLC does not mean my taxes change, okay? So I just wanted to clarify that the legal structure does not necessarily define the tax structure. There are some legal structures that do define the tax structure, so you want to make sure that you have a good attorney and a good CPA that are working together to make sure you do the right structure for your business, but it does not necessarily mean that just because you set up a legal structure that your taxes are going to be set up in a different way for you. So just something to keep in mind. So we are going to move on now to talk about the individual structures and what those look like. All right, the first structure we're going to talk about is the sole proprietorship. And this is the easiest form of business to start because there really is not much to do. You do not need to register with the state. You typically don't really need any sort of formal registration unless you live in a city that might require you to get a license to do business out of your home. Otherwise, there's really no registration for you to do to establish yourself as a business. You can just decide one day, wake up and say, hey, I'm going to do business today and start selling your services or your products that you're developing. You may have to register with the state if you want to have a separate DBA name. DBA is doing business as. So if I am Shauna Huntington doing business as Shauna's Dance Studio, which was my first business, then I might need to register with the state for that business name so that I can ensure that there's no one else that is using my business name that I want to use. So some states require fictitious business name licenses. That's what they call it. Other states do not. So you just need to check with your state to determine if there is one required in your state. And then a sole proprietor is going to be one owner. Sole proprietor is single, and you're going to have one owner. It's going to be tied to you and you alone. So you will not have a partner in this structure. So as a sole proprietor, you are going to file your taxes on your individual return. Because you are not established as a separate legal entity, you will not file a separate tax return. However, it will be a separate schedule on your personal tax return. So it is called a Schedule C. And the Schedule C will be used to report your income and your expenses. Everything that comes out of your profit and loss statement will go in your Schedule C. So you will have something separate on your return that you can show just your business income, but it is filed as a part of your individual tax return. You won't have a separate return to file. If you have more than one business, you will have more than one Schedule C as a part of your personal tax return. You will be paid out of your business by taking draws. So you will not, as a sole proprietor, you can't pay yourself as an employee. You do not get a W-2 from the business. You just pay yourself draws from the business as the business has money available for you. You will pay self-employment taxes on all of the income that you make from your business and from those draws. But you will not receive a W-2 for your earnings. If you want to hire other employees as a part of your business, you can do that as a sole proprietor. However, you would have to register for an employer identification number with the IRS. So you can file, you can have employees as a sole proprietor, but you do need to have an employer identification number to be able to do so. Again, sole proprietors they're not very common any longer because, again, as I'm not an attorney, I cannot tell you all the reasons why, but there is definitely reason to go and establish yourself as a separate entity, as a legal entity separate from you as an individual when you set up a business. So it's very uncommon to have a sole proprietor any longer, but occasionally if you have a very small business or something that's very simple and you want to keep it very simple, then sole proprietor might be the right solution for you. All right, LLCs, limited liability companies. These are becoming a lot more common. This is probably the most common form of business entity that we see these days. And the primary reason is that it's become very simple to establish an LLC, as well as maintaining an LLC has become relatively simple in most states. Every state is different and every state has different rules, so you will want to check with your state and again, consult your attorney. But it is becoming much more common to see limited liability companies over partnerships and corporations, just because it is, you can get some of the same tax benefits and structures out of an LLC as you can with a partnership and a corporation, but there are just it's just easier to maintain the entity in a lot of cases. So that's why a lot of people are going this direction. With an LLC, you have single member LLCs or multi-member LLCs. So if you are currently a sole proprietor and you operate individually, you can establish an LLC separate from you as a person, but you can still be just a single owner for that LLC. Or you can have multiple members of the LLC. So LLCs have taken the place of partnerships in a lot of cases because you can have more than one owner be a part of an LLC. You will register with the state with your LLC. Again, every state is different and every state has different requirements as far as maintaining your LLC status. Some states will require that you file an annual report or an annual registration. Other states do not require this. So you need to check with your state to understand what the requirements are where you're at. You may also need to establish yourself as a foreign entity in other states that you do business. So if you are established in Colorado and that is your home state, you will be registered in Colorado. But if you also do business out in California and you've hired employees in California to manage that business, you may need to register in California as well as a foreign entity. So there's different rules that apply to that depending on if you actually hire employees within that state versus if you just have customers in that state. So those will be things you'll need to look into with each specific state and what their rules are. But just something you need to be aware of, that just because your home office is in one state does not mean you don't need to be registered in another state. It's possible you have to be registered in other states based on your customers, your sales team, as well as employees that might be there. LLCs are simpler than a corporation to maintain. Again, all states are different, so the requirements will be different. But with a corporation, there's typically more corporate records and maintenance that you have to do to keep a corporation active versus keeping an LLC active, which again is why a lot of people are converting to the LLC as a company structure. But it does give you legal protection. So it does separate you from being an individual running a business to an entity, a separate entity running a business that's separate from you as a person. So it does give you that legal protection. All right, so the LLC and the tax structure. So I mentioned that at the beginning of this section that your legal structure does not necessarily define your tax structure. And the LLC is a good example of this. So just because I choose to set up an LLC does not mean it is going to change the way I am taxed unless I elect to do so with the IRS. So for example, an LLC that is a single member LLC is going to be taxed as a sole proprietorship unless I tell the IRS differently. So if I am an individual and I own a business and I've been operating that business and filing on my Schedule C on my personal return, and then I decide to get legal, as a lot of people will say it, and establish myself as an LLC and an entity separate from myself, if I am a single member LLC, I am still going to file my taxes as a Schedule C on my personal return. It's not going to change the way that I file my taxes just because I set up an LLC. Now, I can choose as an LLC, I can tell the IRS I want to be taxed differently. And if that is the case, I can elect to be taxed as a corporation. So the LLC in and of itself does not change my tax classification. However, I can elect as an LLC to be taxed as a corporation. So as an single member LLC, I can be taxed as a sole proprietorship and nothing would change on my taxes. As a multi-member LLC, I can choose to be taxed as a partnership, which would be a separate return, but it would be a partnership return for the multiple members that are part of the LLC. I can also choose as a single member LLC or as a multi-member LLC, I can choose to be taxed as a corporation. And I can further choose to be taxed as an S corporation. So if I am an LLC and I elect to be taxed as a corporation, I then have to make a further designation that I want to be taxed as an S corporation versus a C corporation in that case. I'm not going to go into the tax laws and why you would do one over the other or what all the ins and outs are of each different tax classification. But just know that if you do want to choose to be taxed as an S corporation, you have to elect to be taxed as a corporation and then further designate that you want to be taxed as an S corporation. I will tell you that the biggest difference between an S corporation and a C corporation is that an S corporation by itself does not file its own taxes. It all flows through to the owner, and the owner pays the taxes. A C corporation will stand by itself. It will file its own taxes, and then any owners that are receiving dividends or some type of income from that corporation will then pay taxes on their dividends. So the most common types of tax structure that we see in small business is the S corporation or a partnership. Those are the most common that we see, but we do see plenty of Schedule Cs still. Even though you may be an LLC, you may still be taxed as a Schedule C. And we see our share of C corporations as well, even at the small business level. So this is going to be a discussion to have with your CPA and with your attorney to make sure that you set up the correct legal structure as well as the correct tax structure for your LLC if you choose to go that route. All right, partnerships are another type of legal structure that you can set up. A partnership is going to have more than one owner. So if you are a single owner of a business, you would not have the ability to set up a partnership. But if you have more than one owner, a partnership is an option for you. You will register with the state as a partnership, just like you would as an LLC. But partnerships just aren't as common now that LLCs exist. And again, your attorney can tell you why you might choose a partnership over an LLC. But now that LLCs are an option, which they weren't as common 20 plus years ago, and so partnerships were a lot more common, but now that LLCs are an option for companies, you just don't see partnerships as much because an LLC can be set up with multiple members. There are different types of partnerships, and again, this goes a little bit more into the legal aspect of the structure, but there are different types of partnerships that you can set up, which might be a reason that your attorney will steer you down the path of partnership versus an LLC. All right, a partnership tax return is going to be a separate tax return from your personal return. However, it is a pass-through entity. So the partnership itself files its own tax return, but all income flows through to the owners of the partnership and the taxes are paid on the individual side. Owners are not employees of the partnership, so owners will not receive and should not receive a W-2 from the partnership. They should instead be paid guaranteed payments. So a guaranteed payment is a way to establish a salary for a partner that is paid out in a different way than a W-2, but that is very similar to getting a salary. So it will be reported on the partner's K-1 as a part of their tax return at year end, but it's a way for a partner to be paid, maybe one partner to be paid more than another partner because they have an actual role within the business, so they're getting paid a salary, which is the guaranteed payment. They're getting paid that for the work they're doing in the business, and then the other partners are just sharing in the profits of the company, just like anybody else would that wasn't involved in actually running the business day to day. So guaranteed payments is the form of salary that the partners that are working in the business are receiving. And then the K-1, I mentioned guaranteed payments will be reported on the K-1, but each partner gets a K-1 from the business, and then that K-1 it's kind of like a W-2 for a partner where it shows their share of the business income, any interest income, investment income, and then those guaranteed payments that they might have received. That will all be reported to them on their K-1. And then that K-1 gets reported on the individual's personal tax return. All right, so the corporation is another type of business entity that can be set up. A corporation is going to have one or more than one owner. It is going to be a separate legal entity that's registered with the state. You may also have to register as a foreign entity with states that you have established, a business presence in. So again, each state has a different rule for this, but if you have employees in that state or you do business in that state, you may need to register there. The corporation is not as common since LLCs have become more popular because you can elect to be taxed as a corporation as an LLC, and so a lot of companies are choosing to be established as an LLC versus a corporation. Again, this will be an attorney question as to why that makes sense for you and which is the best option for you. But a corporation has a more formal legal structure. So there are certain requirements that must be met to keep your corporation active. And sometimes it can be easier to maintain an LLC versus a corporation just due to those requirements. So again, something to discuss with your attorney to make sure that you have the right structure set up for you. All right, corporation taxes. If you are an LLC that has elected to be taxed as a corporation, this will apply to you, as well as a corporation taxes. This will apply. You can choose to be, as a corporation or as an entity that's elected to be taxed as a corporation, you can choose to be taxed as an S Corp or a C Corp. An S Corp is going to be a pass-through entity, so you will file a separate tax return for the S Corp, but the S Corp will not pay its own taxes. The income will flow through to you as an individual. There are some new rules, some new tax rules, and again, this is not a CPA discussion or a tax discussion, so this is something to discuss with your CPA. There are some new tax rules that do allow the S Corp to pay some of the tax for the organization. And if that is the case, then it changes the way the income flows through to you personally. So it will be something you'll want to discuss with your CPA. But as a general rule, an S Corp is a pass-through entity and a C Corp is not. So a C Corp stands alone, files its own taxes and pays its own taxes. And then the owners pay taxes on the dividends that they receive. In both cases, S Corp or C Corp, the owners, if they work in the business as an employee, they will receive a W-2. They will be paid as an employee. They will have taxes withheld. They will be treated just like any other employee. You do not have to be paid a salary or get a W-2 as an S Corp or C Corp owner if you are not working within the business. If you're just an owner that doesn't work in the business, then you may just receive profits from the business and get your K-1 that way. You will receive, as an owner, you can be paid out distributions or dividends. So you may get your salary where you're receiving your W-2 wages for the work that you perform in the business, but then you also can receive distributions of profits or dividends is typically what it's called on the C Corp side, where you're receiving you're receiving your share of the income that the company has made. You will get a K-1 as an S Corp. The K-1 is to report the pass-through income that's coming through to you as an individual. With a C Corp, there are no K-1s because the business itself is paying the taxes. So you will just receive a reporting of your dividends if you receive dividends, and then you'll report your income on that. So again, as a corporation or as an LLC, you may be taxed as a corporation if you've made that election. So this tax discussion applies to LLCs as well as corporations if they've made that election to be taxed that way. All right, so going back to our example now for Bootcamp LLC, we have determined that we are going to be a single member LLC. That is how we are going to establish the business legally. So we will establish an LLC, but we will only have one owner. So we'll be a single member LLC. We are going to elect with the IRS that we want to be taxed as a corporation, and then we're going to further elect to be taxed as an S corporation. So we will have a separate tax return we will file for that. The owner will be paid a salary through payroll. So the owner is involved in the business and will be paid a salary through the business. And then the owner will get a K-1. So the business will file its own taxes as the S Corp, and then the owner will receive a K-1 from the business for the income that the business makes. So homework for this week is to complete your legal and tax structure worksheet. So there is a worksheet to complete to think through how you want to be structured as a business. And again, highly recommend that you consult with your attorney as well as your CPA on what makes the most sense for you as a business and how you should go about that and registering with the state. And then you'll want to develop your accountability chart. So this is going to probably take some time to think through the positions that you think you need in the company and what roles and responsibilities make the most sense to go together, to split apart, how you want your functional areas to work, but really think through your ideal structure for the business and really, try to establish all the roles that you think you're going to need, not just what you have today. Really be thinking about your business in the long term and thinking about how you want the business to scale as you develop that. All right, week 3. Next week, we're going to talk about IT structure and organization. Now that we've spent some time talking about your infrastructure and the setup of your business, we're going to start digging more into the actual running of the business and how to set your business up the most efficiently and effectively for operations. So get through your homework for week 2, and I'll see you next week.